Ladies and gents, welcome back to a new video. So in this video, I'm going to be doing a little breakdown of the entirety of last week for EURUSD, see what happened. Now, I've just gotten rid of all of this current week's price action, what's just happened. So this is Friday before the week start. So on Friday, as you can see what happened on the weekly time frame, it's a little bit more clear. We have tapped into this weekly order block. We also run out this high here. So dropping down onto the daily time frame, once we run a high and we run up into this weekly order block, it's fairly reasonable to expect price to retrace back into this range that we've created. So we've got this range low and this range high. Now, essentially, it's just impulse retracement. But it's also being matched up with, you know, these PD arrays. So let me just draw on the areas that price could draw into. So we've got this FEG, and there's also one below it. Now, the interesting thing to note with this top FEG is that if you look back onto previous price action, we created some on the way down here. And instead of trading through this and making it efficient, we've actually just pushed straight through with another inefficiency there. So I'm just going to drag this all the way across, as you can see. And now we have a nice little area for price to potentially draw into to rebalance. So let me get rid of this, get rid of this, get rid of this. Now on the start of the week, let's have a look on the 4-hour time frame. So on the 4-hour time frame, you can clearly see we do have some trend liquidity here, which looks like it should be swept. Ideally, we'd be looking for longs because at the moment, price is creating bullish market structure. You can see, especially on the 12-hour, we're creating bullish market structure. On the weekly, it does still look a little bit bearish, so you'd have to play it carefully. But on the 4-hour and the 12-hour, you can see it is nice and bullish. So what we would expect for the week started would be, ideally, we'd get some sort of consolidation Monday, a rundown in Tuesday, some form of tap into a PD array on the Tuesday or the Wednesday, and then a push up, and potentially Thursday or Friday reversal towards the end of the week. Now, this doesn't always happen perfectly like this, as you will see. Sometimes the low does get set on Wednesday, sometimes it gets set on Monday. It just depends on where the liquidity is that's been run and where price moves into. But this is a fairly standard bi-week template. So if we have a look, let's finish Friday's price action here. Okay, so this is now start of the week, and we're running through this liquidity here, which is key to note. Let me drop down onto this 1 hour and 15-minute time frame. So what I like to do coming into a session, we've got that liquidity on. We've also got, just make sure that's perfect. We've also got that area below, which I believe price would want to draw into, but that also could be an area where price would bounce from. Now, what I like to do is I like to mark out the Asian range, which is this here. So for GMT, it is 1 to 5. There you go. And I like to take some standard deviations. And as you can see, make sure that's perfect. As you can see, one standard deviation to the downside happens to reside within this area. So that gives us some extra confluence. Yeah. Let's play price out. Now, what you could have done, you could take shorts in here, but for me, I'm looking for a bullish outcome on this week. So I wouldn't at this point want to be taking shorts. Now, let's just say, for example, you did. We do have run above some highs in here. Displacement to the downside. Potentially would be some lower time frame entries in there. Let's have a look in 1 minute. There you go. It looks nice and clean. So we've got, oh, didn't mean to do that. We've got a run to the downside first, then we've got a run to the upside. and we've got multiple entries, potentially something that you could have taken in there, and then look to target all the way down to this area. But once again, that's not something that I would be looking for, because I'm bullish on the medium time frames, the 4 hour and the daily. So I'd be wanting to look for some bullish outcomes on the market. Now let's play price out a little bit further. So we get a push down into this level, and ideally I'd want to see some form of inducement. So something where we get like fake breakout traders in long, then we move short, we take out short traders, and then we do something like that. That's ideally what I'd want to see down here before looking to get into the market. Let's drop this down. Cool. Can you see this exact pattern happening there? So we've got liquidity to the downside. Let me just move the center screen. There you go. Liquidity to the downside, liquidity to the upside. So the liquidity to the upside gets run like it does here. Then we get a push to the downside where the liquidity to the downside gets run. And then it looks like we're going to set a low in. Cool. So once we've run this liquidity at the key level that I mentioned, we've created an order block here. So we've pushed away from this key institutional level, this order block here. So ideally, you want to see price be supported by that. As you can see, it is being supported here. Then we get a nice move up. Now, the time of this happens around London close, but I don't trade that time zone, so I wouldn't have taken a trade so far. But it's nice to just see that this concept here is playing out in the live market, alongside with the higher time frame PD arrays, and we've also got this standard deviation for the Asian session as well. So that's some key things to note. Now, I'm assuming here, if I was looking at the market live, I'd assume that we've put in the low for the week, just based on the fact that we've taken a high, we've retraced into this nice key level, and we're making a reaction from it. Now, the next key levels for me would be, let me, if I just delete this off, the next key levels for me would be, okay, where's the liquidity here? We've taken this low, these lows in here. Let's look for areas of imbalance. So we've got obvious imbalance there, but up here we've got some more. So ideally you'd want price to draw into this, and if you saw a reaction from it, you could then play that reaction. But if it doesn't react, you could then expect it to push higher and take out some trendline liquidity up here. So we need to delete all this. Let me make the chart nice and clean. Cool. So going into the Tuesday price action, what you'd want to see ideally is some form of low set in London or New York, pushing away from the direction that we want the market to go in. So if we want the market to go upwards to the upside, in London or New York, we'd want to see a low set. So something like that for the day's trading. Now, I haven't actually looked at this price action yet, so we'll see what happens with it. Let me delete this. Cool. So we open up. We've got the daily open there. We've pushed down below the daily open. Looks like into some prior PD array. Might even look like a good area on this time frame. And then we get a nice push above. So this is the low that's set in London, and you'd expect that to be the low of the day. Then you get some potential re-entries around New York. So this just goes to show that the video that I did probably a month ago now about the weekly and the daily cycles, this is relevant here. You can see it. Low set in London, continuation, New York, perfect. Now, as far as trades go, ideally you'd want to be looking at order blocks, fair value gaps, areas where price may react from, and then you would look for an entry model. So as you can see on this time frame, we've got a 1 hour fair value gap there. Candle bodies are respecting that, which is cool. Yeah. Lower time frame, 15, 5 minute, there's entries there. This is nice. So what you can see here is we set a low in around here. Then we create some form of sweep in here. We get a break to the upside. We get a return down to this area where we had the sweep, and we continue from there. So for me, I'd be looking to ideally get long around this level. Nice confluence there as well, which is pretty cool. And then you could target. There you go. We've got start of this 4 hour fair value gap. So you could target that there. As you can see, look how price reacts at the open of that fair value gap before returning back down for a retracement and continuation move. So that would have bagged you 2.75 R or percent. You know, it fits in with the weekly cycle. We've got a higher time frame confluence, and we've got a daily cycle in here, and we've also got a higher time frame exit area, which is pretty useful. Now, as far as the New York session goes, looks like, let me get rid of all this stuff. So we've had a move from London. You'd expect some form of retracement and continuation in New York. Now, if you're looking at areas like this, there is a chance that if you'd got long here, you probably would have been stopped out. Now, this is why I like to look for sweeps in my trading. So if I'm going long, I want to see a sweep of some lows before I go long. And you can see that here. So we've got a sweep of this low. Sweep of this low. We then have another sweep in there. We've got a sweep of a high. And then another sweep of a low. So this would be an ideal area for entry after we push away from that, because once again, it is that same pattern where we have something like this. Okay, we get a sweep of high here, sweep of high, sweep of low, then entry. Boom. Now, when we get a sweep of this low in here, so this happened around 240, so that's still New York session. We get a sweep of that low, we then get a push up. So that's an order block here. And on the higher time frame, you can see that is tapping into this 1 hour area as well, which is some good confluence. Actually looks slightly better on the 30-minute, these two consecutive candles. So that's within this order block here. We're getting this price action. And once we get a push away from this area after creating that little fractal that I just showed you, this one. So we create that nice little fractal in there. We have this bullish engulfing, and we see this as an order block. This candle here as an order block. So you could have an entry on that as a buy limit. And you can see this next candle moves down, taps into that. And what you do is you'd either target the London highs or the fill-in of that 4 hour fair value gap. And that would give you 5.5 R or percent. There you go. That's the day on Tuesday. Now, running into Wednesday, let's see what happens. I've got to apologize as well. Things aren't that smooth on this recording, but we'll just run with it. So, Wednesday starts. Let's have the daily open on here. Ideally, we'd want to sell below that. Shit, didn't mean to do that. All right, back to Wednesday. There we go. back to Wednesday, we still do have this higher time frame 4-hour fair value gap that I put on the chart before as a key area. Now, like I said, ideally you'd want to be selling below this daily open. Price pushes up into the 4-hour fair value gap. You can see potential short opportunities here. Within this 4-hour fair value gap, you can see a sweep, and that's something that I obviously like, but this isn't something I would have taken because it's against the bias for me. But yeah, you can essentially see the same principles in here. We've got an initial move down from the 4-hour fair value gap, which means that there's going to be liquidity above here. And we then get a sweep here. So we get our sweep, then another sweep, and here's the entry in here. So if you did want to do a bit of a counter trend, this could be something that you'd want to do. But for me, risk reward's not perfect, and also it's against where I want the weekly cycle to expand. So in further on in the day, this is London. So we get a push down below the daily open, and also we take out some lows in here. So we've got some nice raids in there, and we also tap into this order block down here. So you'd expect price wanting to move away from there. Now, let's have a look at this. Get that out of the way because it's making things look a little bit busy in here. So we've got a tap down into this order block. We've tapped down below some lows. Ideally, I'd want to see a high swept and then low swept, which you can see just happens there, and then a movement away from there. Looks better on this time frame, but yeah, you can see you get your move in there. Enter on fair value gap if you like, and then look to target this high created up here. Also, we do have some liquidity that's there, so you'd want to target there. You could also target the fill of that fair value gap, and that would leave you with around 5.5 R once again. Now, what you can see has happened here, instead of actually moving from there, so we get a small movement from there. You just do this, so you get about 2R, and then you reverse from there. Now, for me, I like to break even specific trades at 1.5 R or 2R, so this actually would have just ended up being a break even. And then what price has done is it's taken another stab lower. So in that occasion there, I would have been wrong, but I wouldn't have lost anything because we made a nice reaction from that area. But we were break even due to good trade management. So what we see now is we then got a sweep below the Asian low. Now, some people wait for a sweep of the Asian low, but that doesn't always occur. So sometimes you can take trades before then. So we've taken a sweep below the Asian low, sort of within this order block, but to be honest, I wouldn't really be considering that. What I am going to consider here is we've got 4-hour fair value gap that price taps into. So potentially that's what price wanted to do. It wanted to just make efficient pricing down there. So once again, let's have a look, see if there's an entry within here. We tap down below the Asian low into that area. I'd want to see a sweep, see on the 1 minute, see what's happening. Cool. So here we go. We've got sweep here, but you can see we sweep to the upside first, sweep to the upside first, sweep to the downside, order block created there, and fair value gap. So you enter there, and then once again you target all the way up there. This is ridiculous risk reward. So personally, you'd want to take off a lot of your position nice and early on, looking at areas where price could potentially react from. So if price could potentially react from this area in here, we've also got, there you go, price could react from this area in here. You'd want to take partials out of that area, taking the high, partials, and then essentially leave on a small swing position. But yeah, as you can see, price does actually make a small reaction from there. Slightly bigger reaction even. So that's how you play this. Yeah, let's have a look at what happens in New York. So in New York, we're now assuming that we've made the low for the day here. So in New York, you'd potentially want to see some form of continuation. Now, with this area here, what's happened is it's been traded through here. It's been traded through once again without making it efficient, and then it's been traded through once again. So this could act as a great area for a move upwards. And as you can see, look, prices come back down to test loads. Now, there was actually some news at this time, so you'd probably want to avoid taking anything, but yeah, price is a little bit choppy, so you'd want to leave that. And if you did have this position on, you just leave partials running, ideally taking partials before there. So moving on to the next day, see what price does. Boom, moves up. Moving on to the next day, this is Thursday, so this is where I'd be cautious of a potential reversal. So yeah, having a look at key areas, 4-hour highs. So we've got 1 4-hour high here, 1 4-hour high here, 1 4-hour high here. So I'm just going to mark those out. There you go. There you go. And there you go. So what I'd want to see is either price to blow through all of these and then reverse after taking this high up here, or potentially making some form of rejection from any one of these back into the range, into this fair value gap here, or the one that gets created. So I'll move on price a little bit further. There we go. There's the start of the new day. We've got the Asian session. So actually, in the night, we've run out these two and we've not rejected from them. But it looks like we've pushed up in the Asian session here, and we're starting to make some interesting price action around this level. We've pushed above a couple of times. We've created a sweep in the Asian session, and it looks like we're going to make some form of retracement. Yeah, 4-hour sweep. So we want to look at where price is going to come back within the range. In here. In here. So as far as London price action goes, let's play price on a little bit, because it's not quite London session. There you go, there's London session there. So let's have a look at what happens around this level. So we've got that key high. What happens? We create our nice little fractal. We get a low sweep in there. Then we get a high sweep. Then we break down and we test this order block. And then we push from there. Now, I wouldn't take this, even though you'd be anticipating this. I personally wouldn't take this, just purely because it's against the weekly cycle expansion that I'd be expecting. But you could take it if you've got an appetite for higher risk. So partials off of this area, which is the first 4-hour area, and you'd be break even at this level. So see what happens. Break even, bit of a shame. But then price looks to push further to the downside, clearing out this 4-hour fair value gap. Now, this could be an area that you'd want to look to take along. So let me just get out this and this, and then see what happens within this level. So we've obviously got a run down below the Asian session. This is just before New York, so potentially a reversal area. We've got 2 equal lows there, push into that area. So let's see. So for me, what I can see here is just in the start of New York session, we've got run of this high. We do have what looks to be fairly equal lows. It looks like a bit of a sweep, but you could potentially have taken a long here. So you see, sweep to the upside, sweep to the downside. You could have taken a long here, but those lows look fairly equal. So I think I'd want to see a run of those before I push up. Do get a little bit of push higher, and then we move out of the New York session. So it could have been a trade that you took, but for me, I probably would have avoided that just because of those lows. Let's see what happens for the rest of the day. So we're now pushing to the new day, which is Friday, or just before Friday, and boom, as you can see, we did end up pushing just below those equal lows into this area here, and then looks like we're making a push up there. So would want to see some form of drop in London to look to get long, but Friday's trading is probably not going to be ideal. So there you go, we get drop in London back towards this area. Looks like we've hit out of a rejection block within this 4-hour area. So you could potentially look to get long, but this looks like fast moving price action, so there's probably not going to be a fractal. There isn't really a fractal here, so no trade there. And there is somewhat relative equal highs up there, so that could be some liquidity target. We then get pushed down further, which looks to be a potential rebalance of this area that I mentioned before, and it could be a potential entry to get long. So we do actually have a sweep there, 15-minute time frame. And this is in New York session. Let's drop down and see if we've got the fractal. So we do have a fractal here, which is pretty cool. Sweep the high, sweep the low, tap into this area, and then we get long on this order block. Cool. As far as targets go, overall target would be at the top here, but obviously taking partials as we go at key levels, because trade's not guaranteed to run all the way up here, and also it's a 1 to 9. So what I'd be doing is looking to take some partials off of your trade at key levels. So we've got fractal highs. We've also got a lot of structure that happens around this level, so could get reaction. We've got fair value gaps up here. Oops. And we've also got potential order block here as well. So about 1 to 4-ish. Yeah, 1 to 4-ish, we would have a potential partial. We then actually do push up towards this area, the fair value gap. And as you can see, prices looking to be muddling around that. So that would be a great partial area as well. But as you can see, that concludes the week. But this just goes to show you what you can actually do when you get the bias early. You get higher time frame levels. This higher time frame level, which was the daily fair value gap, which was traded through with another fair value gap, that supported price is like true institutional support and resistance. That supported price and has allowed us to have a nice bullish bias for the entire week, which has created a 224 pip range to the upside and probably given around 15R in potential returns. So yeah, that's going to conclude the breakdown of EURUSD. I hope you guys enjoyed it. Once again, apologies that it's a little bit slapdash here and there, but I've not recorded a video in like a week, so sometimes I forget how to do things. Anyways, that's going to conclude it. I hope you guys enjoyed. Drop a like and subscribe for more videos coming soon. Peace.